What is going on, boys? It has been a while. I am so sorry for the lack of posting these past couple of days. I think it's been 13 days since I posted my last video. I was in Dallas literally today. I've been in Dallas the past 3 days. I was streaming with my boys up there, and I just haven't been able to film a YouTube video, but a vlog will be coming out as well. Just want to get that out of the way. But today, I decided, right, I don't want to delay any more YouTube videos. I want to go ahead and give you guys the sauce about standard deviation, kind of go over it in the simplest way possible. Standard deviation, past 5 months have been 5 figure months. This month, again, we took out a 6K payout from Alpha Futures on August 11th. And then we're one more winning day away from another 3K payout, 3 days away from another 1.5K payout, and then 5 days away from another 1 point. So it's literally all just winning days, right? And standard deviation has allowed me to build up that buffer. It's super, super precise. I also do want to get out the way that a lot of people try to make standard deviation complicated. I feel like a lot of people try to make themselves sound smart because it is just math. It's just levels and like average and whatever, all that shit. But for me, I like to keep the shit simple, and as long as it works, I'm not gonna do too much talking in this video because I want to show you guys more proof in the pudding, and actual like solid evidence of standard deviation working, while at the same time you don't have to dive into like the actual equations of standard deviation, the actual like mathematical sides of it. I'm going to show you guys the level to pick. I'm going to show you guys the standard deviation tool that I use. I'm going to show you guys how to mark it out correctly. That's all you need to know. You don't need to know anything else about it. You don't have to learn about plus this, divide this, whatever. It's how far away from the average. That's the definition of standard deviation. But in order to use it, you don't need to know that. Knowing what it is, like the definition, the vocabulary terms of that, that's different versus you actually just picking out the correct level for standard deviation, the level that works the best for standard deviation, and using that level correctly, right? I think it's kind of like similar to you know what, let me just stop talking. I probably made a couple of people already mad. So yeah, this is just how I trade my standard deviation. It's helped me secure 5 figure months consistently over the last 5-6 months. I think it's been since March, our last losing month. So yeah, if you guys want to trust me, trust me. If not, completely cool. I get it. I understand. No hard feelings. And yeah, let's just get straight into it. So standard deviation, STDV. What is it? Like I said, I'm not going to overcomplicate shit, right? Because people tend to overcomplicate standard deviation, and that fucks everything up for everybody. So in trading, standard deviation is a way to measure how far prices moved away from average fair value. Do I know what that means? Fuck no. I typed this into ChatGPT just so I could have something. Standard deviation for me is the -1 standard deviation level. Way back, when I first started, I was introduced to this -1 standard deviation level by somebody in a mod in my Discord, and it's been around a year and some change, and this -1 standard deviation level has worked every single time since then, bro. And I'll show you guys solid proof of that, through the charts, real-time data. So this is the standard deviation level that I'm talking about right now, is the -1. Everything is blacked out. Everything else is blacked out. I don't think I've ever really paid attention to the -2 or the -2.5 and the -4 level. Yes, people use that. Yes, you may use that as well. But for me, I only stick to -1. I like to only pick -1. For me, I've seen that -1 has been the most consistent and the most precise for a lot of my trades, bro. And I feel like if you're able to pair up -1 standard deviation with the correct key levels, with the correct OTE, or with a gap, or anything else, honestly, because standard deviation is extremely powerful, bro. If you're able to catch a standard deviation play and it's done correctly, that all my trades that have come from zero drawdown have come from standard deviation, honestly. So pretty excited to get into this a little bit deeper. But yeah, standard deviation, all I want you guys to really know, fuck the definition. You really don't need to know the definition. Why know the vocab when all you're doing is drawing up a fib tool? So this is the fib levels. And the next thing is how to mark out standard deviation. This is the only thing that I want you guys to really, it's not confusing, but I want you guys to kind of think a little bit harder. And you might not even need to. So in order to mark out a standard deviation leg, I've talked about this a lot in my live streams, but people sometimes I get it though. Like it's kind of hard when I'm just talking about it, so I'm going to draw it out for you guys. In order to mark out standard deviation, all you're doing is you're finding manipulation legs. Right now, what do I mean by a manipulation leg? So for example, if you're trying to look for a bearish standard deviation level, right? If you're in a bearish trend or a bearish manipulation leg, sorry, it's kind of confusing because you're going to look for a bearish manipulation leg, but then you're probably trying to catch a long off of it, right? Because if you're looking at a bearish manipulation leg, the standard deviation level is going to be below, and you're going to try to take a long off that level that's below the bearish manipulation leg. So, for example, we have a high that has been made, right? That's going to be your first initial high that's been made. And we have a low off that, right? So this is the low. This is the first, keep that in mind. This is the first initial high. This is the first initial low, right? Then we're going to make that higher high, right? Once we make this higher high, in order for us to validify this as a manipulation leg, we have to have this first initial low get breaking back down to the downside. Like so. Like this. Boom. Right? So once we're able to come back down and take out that first initial low, this right here is a bearish manipulation leg, right? Or sorry. Did I flip-flop these? Yeah, I did. Bullish manipulation leg, obviously, because this is bullish. Holy fuck. It's 10:14 p.m. out here. Still, same concepts, right? This is a bullish manipulation leg, and we're still looking to find a long off of this, right? Because all we're doing off of this is, like I said, marking out that manipulation leg, right? So high, number 1, low, number 2, higher high, number 3, lower low, number 4. What are we going to do? With this standard deviation leg, we're going to mark out from the high to the low. That's how you're going to mark it out. And vice versa for a bearish example. So if we have a low that has been made, a high, lower low, this could just rip straight down and we wouldn't have been able to catch this move, right? Or maybe it rips straight down because of the fact that this is the manipulation leg, because maybe, I don't know, we had like lower low. I don't know, dude. Let's not get into that. But we want this, in order to validify this as a manipulation leg, we want this to come back up and take out this high right here, right? So basically the exact reverse of a bullish manipulation leg. We need a bearish manipulation leg here. Now what do? We mark out the low of that manipulation leg to the high of the manip. I'm just gonna say manip of the manip leg, and we're gonna mark out our -1 standard deviation level, right? This is solely how to mark out standard deviation. Now, I haven't gone into the OTE or like how to pair standard deviation with how to pair it with your bias, whatever, or how I pair with my bias and things. But this is solely how to mark out standard deviation. Like I said, I'm just going to try to keep things as simple as possible. I use standard deviation super simply, and it works out perfectly fine for me because I keep it simple. I don't try to complicate shit, right? So all you're doing, keeping in mind, is you're marking out manipulation legs. And how do you identify manipulation legs? Well, I just told you. A bullish manipulation leg looks like that. A bearish manipulation leg looks like this. Okay? Now, how to use standard deviation the best way possible. How to actually use standard deviation. Hold on, let me mark this out so I don't forget. Okay. So how to use standard deviation the best way possible. I've dropped a video on CRT and OTE as well. Those two things are the main things that I like to pair standard deviation with. Now, if I were to tell you guys the entire thing about, like, hopefully you guys watch those past two videos, because I like to combine these three concepts together, right? Like, it would be a whole nother video if I were to dive details into how I use standard deviation the best way possible, like how I combine these things together. But the best way I can put it, or I'll give you an example before we actually hop into a real life example. So say if we want to grab a reversal, right? A reversal from, I don't know, a high to, like, we want to grab a bullish reversal. This is basically best case scenario, right? Just to break it down as simply as possible. Obviously, in a perfect world, we'd have that bearish manipulation leg. We're in a downtrend. Maybe we've taken out, I don't know, an internal high here or some shit. I don't know, dude, right? We're going to have that manipulation leg. We have, let's say, stacked equal highs higher here, right? That we edged out. We just took out internal buy side, and we just edged out these stacked equal highs, or like previous day high that we clearly have as I draw, right? Every single time I start these videos, I tell you guys to find a drawn liquidity. Even CRT, OTE, I need you guys to find your bias, okay? You have to have a bias and you have to stick to it. I tell you guys, I've also had videos over how to find your bias, whatever, right? So have a bias and stick to it. Whatever your bias is going to be, whatever your drawn liquidity is, whatever your bias is. Let's just say here we have previous day high that we want to hit for whatever reason. There's probably other concepts or confluences for us. as to why we're leaning towards previous day high or a bullish bias, but whatever, right? So we want to see previous day high get hit, and we see that we're beginning to trend down or reverse before previous day high gets hit. So maybe it's giving us an entry, right? And we have this bearish manipulation leg that ends up playing out. And now we have -1 that aligns with what? Well, for me, I want to see it align with best case scenario with OTE, right? And maybe like a intermediate time frame gap inside of standard deviation. Like that's the best case scenario for me. So let's just say that we have like a range here. This is such a bad drawing. Let's just say we have a range here. Okay. Our range, this is the range that we're playing with, and we're gonna say that OTE aligns up with the standard deviation level here. I'm kind of gonna make this bigger. Mind you, best case scenario, not saying that this happens, this A+ setup happens every single time, but it genuinely does show up, and I'll show you guys actual examples. So for me, what I'd be looking for is if a standard deviation level, right? Because we're gonna have a lot of manipulation legs. We're gonna have a lot on the lower time frame. We're gonna have, so how do you choose the right one? This is how you choose the right one, the one that aligns with most of your confluences and making sure that it's the correct, that aligns with the correct bias, right? So maybe we have a standard deviation level here, a smaller standard deviation level, I don't know, or above or some shit, but I want to see it personally inside of OTE, right? Another great confluence for me is a 5 or a 15-minute gap that aligns with that -1 standard deviation level. Right now, again, this is a perfect world, so maybe inside here there's a low that we can take. Maybe there's stacked relative equal lows. This is just for example. Like I hate keep repeating in a perfect world, but I still know that people are gonna think that this is just unrealistic. But I will show, like I said, I will show you guys examples. Right, I'm just trying to break it down as simply as possible. Like break it down on how I mean to use standard deviation the best way possible is just by showing you guys multiple confluences that you can use. So maybe there's relative equal lows here that aligns with standard deviation somewhat. Maybe there's, you know, an hourly low that we could CRT inside of a 15-minute gap inside of OTE, right? Let's just say that there's a 1 hour low inside of this 15-minute gap that we have also aligned with the standard deviation level that's also aligned with OTE. So what standard deviation is going to do is we have a range that we want to look for, right, for a reversal. We have a 12-point range that we look at to see if we can take longs out of this point, out of any of this point. But with standard deviation, we can get a little bit more precise, right? So with standard deviation, it's going to allow us to say, oh, okay, maybe 783 is the level that's going to reverse, right? Instead of us trying to find a setup inside of a 12-point range, trying to guess when price will reverse inside of a 12-point range, maybe that -1 standard deviation level is the spot that we take a reversal off of. So for me, that's how I use my standard deviations. I don't just mark out any manipulation leg, and if it's in the middle of fucking nowhere, it's not like I'm gonna blindly press buy or sell. Right? I need it to pair up with at least OTE for me. If we don't have like relative equal lows or an hourly low or I don't know, a CRT inside of there, it's fine. At least I need OTE to get retraced into. I'm not just going to take a random standard deviation level. So please make sure when you're using standard deviation, like I said, it aligns with your higher time frame bias. This is how you're going to mitigate those mistakes that I'm going to talk about here, right? Common mistakes I just talked about is 1, taking random levels and manip legs. What I mean by that is standard deviation legs, they're going to show up every single time. There's thousands of manipulation legs inside of a daily candle. That's why it's important to have your bias set, right? Taking random levels, what I mean by this is taking standard deviation level that's against your bias, taking standard deviation levels that are in between lows and not at like places where lows can be swept, but in between or like right above a internal low or something like that. Like for example, we had a standard deviation leg level here today that was like above equilibrium. Like the manipulation leg looked really clean, but it was above equilibrium. It was above OTE. So I'm not going to take a trade if there's a standard deviation level here paired with nothing, right? There's probably a higher time frame standard deviation leg instead of marking out something lower time frame, right? Higher time frame is also, like I said, always holds higher power. So usually it'll have the stronger reactions if your bias is correct. This is how you get fucked and ran through, is if your bias isn't correct, it's going to run through that level, and I'll show you guys examples of that as well. So common mistakes, taking random levels and manipulation legs. And what else is there? I mean, I just basically verbalized it the entire time, but trading against your bias. If you have the wrong bias, it's fine, right? But don't take a standard deviation level against your bias. At least have the dignity to take it with your bias, even if you're wrong. So I think I've covered, in terms of verbalization, everything, how to mark out standard deviation. Hopefully you guys understood that, what standard deviation is. Honestly, it literally just copy these settings and mark out, and now you know how to mark out and look for that -1 to get hit, and then how to use it the best way possible. I've taught you guys CRT, I've talked to you guys about OTE, I've talked to you guys about Doji candles, I've talked to you guys about how to, find your bias. If you guys have watched every single one of those videos, you're going to know what I'm talking about when you're aligning all these confluences together. And if you've watched them, and if you've actually tried these concepts, you know that it isn't bullshit, that these things align with each other. Right? It's not like, it's not rare. It's not that rare, dude. And I'll show you guys examples of it right now. So yeah, let's go ahead and get into the examples of good and the bad ones. Okay, so the first manipulation legs that we're gonna look at are gonna be higher time frame. Higher time frame manipulation legs are take a little bit longer to form, just because they're higher time frame, but usually are stronger. Now, again, if you don't have the right bias, it's not gonna work either way, right? So this first one comes in on the hourly time frame. Now, because it takes longer to form, you have to wait to see what it does. So we have, it's kind of weird here because we have two, this is how you're going to go about this. So we have two manipulation legs here, right? So if you have this low here, you have this high, you have a lower low, and then it breaks out of this high, right? So we're going to mark out this manipulation leg because we're obviously in an uptrend. We're going to want to stick to the trend. We're at all-time highs. It's not like we want to suddenly see a reversal off of all-time highs. So this manipulation leg is something that we're going to mark out. Now you're expecting -1 to get hit on a higher time frame to 540 to see a good reaction, to maybe see if shorts are not the play. So next, maybe, when was this? On Friday. So the next couple of hours or the next week, you have a bullish bias. Oh no, nobody's the market maker. You don't know what price is going to do. Just because we have a standard deviation level, you have I don't know, you can be the best trader in the world. You don't know what price is going to do. And we end up dumping off the next couple of hours on Monday, right? And we end up breaking this low again. So now we have a new standard deviation level. This manipulation leg didn't end up working, and that's fine, right? Like I said, nothing is 100% confluence, especially if it's something that you're just wanting for us, especially if we're at all-time highs and you're just wanting us to hit a level at all-time highs when there's nothing towards the left side, right? So that doesn't end up working, and we're able to know that that leg is invalid because we end up breaking this low at 9 p.m. on Monday 2 days ago. So once we break out this low, now we have shifted structure, change of character, whatever you want to call it. This standard deviation level is a lot more valid. So what we're going to do is we're going to mark out this high, low, higher high, lower low. So what's that manipulation leg? It is right here. We're going to mark that out. And on a higher time frame, we're also going to mark out OTE. Where's OTE? From this low to this high, right? Now, you guys are looking at this example. And you can clearly see that it doesn't end up pumping 500 points or whatever, right? We're inside OTE. It aligns with 0.79. I'm pretty sure we have an hourly gap. Yeah, aligned with this as well. I remember looking at this pretty hardly. I remember eyeing this a bit. And I think we did actually end up taking this during London. This was London, right? Yeah, this was during London. On stream when I was in Dallas, if I remember correctly. But we didn't end up pumping that many points. Still, I'm gonna teach you guys or walk you guys through how we traded this. Let me refresh my page. I don't know why we're lagging. Okay, so once we reach the three things, this is honestly, like I said, it's not that rare. We have this hourly gap, like the example that I gave you guys. It's not that rare. We're inside of OTE. We have -1 standard deviation on a high time frame. We have this hourly gap, but the only thing, again, is if you don't have the right draw or right bias, it doesn't matter, right? My bias right here was for us to expect a reversal off of this -1 standard deviation level. I don't know how the daily candle looked back then, but we were at, we aren't at all-time highs. Okay, well, we were approaching all-time highs, and I don't know, from there, I want to see us continue pushing up to all-time highs, right? So I have a bullish bias. We marked out this external OTE range. I want to see if we can long off of this. This is higher time frame as well, so I could probably catch something on a 5 or 15 or the 1 minute for a quick TP. So that's how I mark it out on a higher time frame. If you go into the lower, you can see on the 30 minute, I remember we had a CRT here. We have a CRT on a 30 minute at 5:30 a.m. I'm not going to get too deep into CRTs and OT and lower time frame entries because, like I said, I'm just here to teach you guys how I mark out my standard deviations and how price reacts off of them and how to identify them. So on a higher time frame, that -1 standard deviation level is the most recent one that I think I can remember. Now, again, we have this one that has now presented itself. We have this low, high, lower, low. Oh, it hasn't presented yet. But if we end up breaking this high, then it would be a valid level here. Right now, if we mark out OTE from here, does it align? It does perfectly with 0.79. So this could be a strong level for us to short off of if we are to validify this as a manipulation leg, right? In order to do that, we have to make our last higher high. So low, high, lower, low. We have to make our higher high and break this high out if we want to validify that level that we just marked out as a potential area for shorts. So that's kind of how you mark it out on a higher time frame. Let me show you guys how to do it on a lower to intermediate time frame. Okay, now I want to show you guys an example of actually something that happened literally today. I'm gonna show you guys, I think it's the most clear on the 5 minute time frame. Yeah, I think it's the most clear on the 5. So actually, let me cover this though. You can mark out a standard deviation level from any time frame, and it's usually the same if you mark it out correctly. So, I couldn't find the tool. All right, so for this standard deviation leg here, we have a low, high, lower, low, high, right. That's literally how you just identify one. You go into the time frame, see if you have any manipulation leg anywhere. First identify those manipulation legs, and then you're gonna go through the steps of seeing whether it aligns with your bias, whether you have OTE aligning with that standard deviation level. It's like you pick out the manipulation leg first, and then you go through like a deeper research of whether that level is valid or not. Like, I don't know, what's a better example? No, that sounds bad. You let's just say you pick a watermelon from the store that looks good, that looks ripe, whatever, and then you go in for the other checklist, like you knock on it, you I don't know, carry it, whatever you guys do with y'all's watermelons. So you see a manipulation leg here. Now, does it align with a higher time frame bias, or does it align with anything higher time frame to tell you maybe we have a reversal off of that point? The daily, what was I thinking here? I think the main reason why I want to see this level get hit on a higher time frame was my OT level from this higher time frame range, because of the fact that 0.79 was really close with his -1 standard deviation level. Now, I'm not gonna lie, also, I am bullish today, or this daily candle. I'm expecting for us to hit out daily previous day high, but also we have 6 p.m. open lows. So we have higher time frame OTE. We have this -1 standard deviation level lining up. We have 6 p.m. open that has yet to be taken. It is still lying pretty clean at 553. Hence the reason why I think we honestly edged, where we keep edging these highs, is because I do think we want to see previous day low before we're able to head to these highs. I'm going to post this video before that happens. If I call it out, let me know. So, yeah, we have 6 p.m. open lows that haven't been taken yet. So that's my draw on liquidity. Higher time frame. We have 0.79 aligning pretty closely to this -1 standard deviation level. Can we find maybe 1 or 2 more things that align with the standard deviation level to kind of tell us that maybe this is an even more valid level? Well, we have this 15-minute gap here. In addition to this 15-minute, it's right above that 15-minute gap. Well, that's fine, because I know we had a 5-minute gap here too. We have a 5-minute gap here as well. And we also have this internal hourly high. I know this is an hourly high for a fact, because I know I was looking at this. Where is it? I know this is an hourly high, gang. Bang! There we go. Yeah, because I know this is an hourly high. So I was literally looking at this this morning. So, or not this morning, tonight. So we have multiple gaps, like that 15-minute and that 5-minute. That's pretty close to that -1 standard deviation level. It's not directly inside of it, but everything here is right below that standard deviation, right? I think that's hence the reason why we edged it by a couple of points. How many points was this actually? by 7 points is because I think everything was aligned right below it. We have 0.79. We had an hourly high because we want to CRT this, right? And it ended up playing out, bro. This hourly CRT swept out this internal high. We ended up respecting, tapping into that 5-minute gap, tapping into this 15. -1 just didn't end up hitting. But that's how you align or mark out your standard deviation leg on the lower or intermediate time frame. And if you guys can look at the 1 minute, it honestly is the same thing, right? It's just a lot more candles. You still see that low, you still see that high, you see that lower low, and that higher high. Maybe on the 50-minute it gets a little bit harder. No, you can still see it. The low here, the high, lower low, higher high. 30-minute, maybe there's not enough candles. It's a little bit harder to see as you go higher time frame. That's why the higher time frame ones, you want to look for the bigger moves. Because if you're marking out lower time frame standard deviation levels, usually you want it to be inside of a range. Inside of like an OTE, a higher time frame OTE. Not like, not like a move that begins a downtrend or, things like that. If you guys can understand what I'm saying. Like lower time frame standard deviation levels are going to want to be taken inside of a range, inside of a higher time frame OT level that you can align it with. Bigger standard deviation, bigger STDV levels are going to want to be taken to look for those like higher time frame reversals outside of a range at least. Like this one that I just went over at the last example. I'm gonna try. Let's see if we find one more that hits it precisely, because I want to show you guys how precise this is. I could probably find one not from too long ago, so let me check real quickly. All right, and then last example. So this one happened last week, so we're in this internal range here. We're gonna mark out OTE. After we tap into OTE, maybe we have an hourly CRT or some shit. Maybe you don't get into these shorts, for example, right? You just don't end up end up missing these shorts. You don't end up taking it. But what do we have even if we miss these shorts? How do we know whether we can take longs after these shorts play out or not? We're gonna mark out our standard deviation level. So we have a manipulation leg here, right? We don't see any other manipulation leg while these shorts are playing out. This is the only thing that we have inside of this range that also hits OT and is now dumping off of. So we're gonna mark out our manipulation leg there, and we're gonna see our -1 standard deviation level. But I mean, pretend like this didn't hit it perfectly. At 550, right? At 550. Now, in order to validify that as a manipulation leg, again, mark out OTE of that internal range. Holy lag. Or mark out OTE of that external range, right? Whatever low to the high we have created. See if -1 lines up with OTE of that. And OTE is at 0.618, the first OTE level, and at 528, right? So now it gives us a lot more precise range, a 20-point range, to see whether we can take longs inside of that range. And what do? We have a 15-minute CRT, 5-minute as well, should CRT if we have a 15. Yeah, CRT's off this 5-minute candle closes above that 533 level. And I'm pretty sure we can see we retraced into OT again for an entry. Where is it? Inside, yeah, this was a really clean trade. What the fuck? 2:20 p.m. From this low to this high that we've made, we retrace into internal OT again, and we rip off of it. So you see how I used the ranges, the internal ranges here first to identify like a manipulation leg. Like I said, pick out a manipulation leg. Doesn't matter which. Pick one out. Pick anything you see pick one out that you see, right? Then you look. Does it align with your bias? Does it follow the trend? Your higher time frame draws on liquidity. Does it make sense at first to see whether that standard deviation would look good in the first place or not? Like, give it the eye test. This high, this low, higher high, lower low. Is it possible we're able to reverse off of this standard deviation leg? Now look at the other things that present itself. We have a low here, a high, mark out OTE. Well, it does end up aligning with OTE here. What else is there? We have this internal low that we could soup out. Is there an hourly gap that we could pair that with? Nope, no hourly gap, nothing there. Maybe a 30, potentially a 30-minute gap, or a 15 or a 5. Don't know. I didn't look at this. Yeah, 5 and 15 I feel like would be irrelevant if it's for this. But we have OTE and standard deviation. Gives us a 20-point range to see if we have an hourly CRT or a 30-minute CRT inside of this range. If we do, be completely fine with taking the long here, and ended up printing pretty clean here. We tapped into it pretty much perfectly. I mean, if you're able to understand the CRT that plays after watching last video, I think this would be one of those trades that would have ended up playing out for you. But yeah, I think that's the last example that I kind of wanted to go over. Okay, so I know not a perfect, hopefully like not a perfect explanation, or like I don't know, I just feel like I kind of fucked it up on certain parts, but hopefully you guys understood, most importantly, how to mark out standard deviations. Now, some of it may have sounded a little bit confusing, maybe because I've been doing it for a year and a half and I'm struggling to let you guys know about the discretionary part of standard deviation, or like there's discretion in everything, right? In every single concept that we use. So maybe standard deviation, because of that, I've been using it for a year and a half. Maybe I've built up some like behind the scenes discretion on which manipulation legs to actually mark out and validify. I think that's the hardest part about this video, is finding out which manipulation legs to use. But the best way I can explain it is mark out any manipulation leg that you see first, and then you do those checks after. Does it align with your bias? Does it align with some higher time frame OT level? And always make sure to remember that you can mark out a standard deviation any time frame, but higher time frames will hold higher power, but they do take a little bit longer to form. You can use standard deviation as points of take profit. You can use it as points of reversal. You can use it as points of projection to see whether price will move up towards that all time, towards that higher, towards that low, whatever. And then also, what's another important thing to know? Well, the mistakes of trying to trade it without anything else, like just taking a random standard deviation level and not pairing it with OTE, or clearly it's against your bias that you've set, or that drawn liquidity that you want to see get hit. Just don't take random standard deviation levels. That's the biggest thing, because manipulation legs happen everywhere. They happen everywhere. But if it's not paired with anything else, it's completely random. It's irrelevant. So maybe that's a discretionary part that I'm kind of talking about. But hopefully, technical wise, I showed you guys how to mark out those first. I kind of want you guys to go through that on your own either way. I just want to show you guys how to mark standard deviation out, and how to pair with other things. And I want you guys to experience it, learn, lose, win, and then build your own discretion off of it. But yeah, it's getting late. It's 11 p.m. now. I'm glad I got this video out for you boys. I'm going to wrap the video up here. If you guys have any other questions about concepts, whatever, drop them in the comments. Come to my streams, whatever. And yeah, make sure you guys tap in with code AJO. Bang. Love you boys as always. God bless. I hope you guys have a very good rest of your night. I'm going to go ahead and knock out. I am so tired. I drove back 3 hours from Dallas today. Hopped on train for 2 hours. Did this for another hour and a half. Now what do I have to do? I have a call tomorrow at 9 a.m. so I have to tell them that I can't stream tomorrow morning. I forgot to tell them that. But it's fine. I'll see you guys in the next video. Love y'all. Peace. Hopefully y'all understood. If you guys have any questions, let me know in the comments below. God bless. I'll see you guys in the next video. Peace.